Hello, and welcome to the May Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. April was an up and down, back and forth month, and we ended up not that far from where we started. What's interesting about this is we finished up a very strong March with a bounce back from a terrible first 2 months of the year. And the question for April was really, are we going to be able to take that to the next level? And the answer appears to be no. Unfortunately, what happened is we have a number of worries going into the month. We saw the earnings growth rate revised downward by the greatest amount since the financial crisis. We saw real worries about the U.S. economy. We've seen the service sector moving downwards for the past several months. We've seen the manufacturing sector actually in contraction for the past several months as well. And so when we moved into the month, we saw a pullback that says, yes, we're actually concerned about how the economy evolves. And then we got some good news. Things are actually not as bad as we thought. We saw the service sector move back up. We saw the manufacturing sector move back into expansion. These are very positive steps, and the market reacted. We also saw some evidence on the corporate side that things aren't as bad as expected. We saw some very positive earnings surprises. People looked at that and said, yes, things are not as bad as we think, and the market rose. The problem is we're not quite out of the woods yet, and the data continued to show that. When we look at, for example, durable goods orders, companies ordering capital equipment, it continued to shrink for the second month in a row, and that's something to be concerned about. We did see strong hiring growth, and we saw strong income growth. So the consumer is doing well in their ability to spend, but they don't have the confidence to actually go out and spend the money that they have. And that's another headwind for the economy. So looking at where we are right now, the question we have to ask ourselves is, was the pullback of the first quarter what we're likely to see, or are we likely to see the market continue to move along? I would argue the pullback was a test of the market and one that it passed, because the fundamentals of the U.S. economy remain solid. Job growth, for example, continues to be strong. Income growth continues to be strong. Typically, consumer confidence follows those two items. It suffered, certainly, from the slowdown in the past quarter or two, but we can see it potentially starting to come back, and the same applies to business confidence. So where we are right now, we're not out of the slowdown, but with things improving, it does definitely look like we are moving out of it, and will continue to do so. From a stock market perspective, we continue to have the possibility for positive surprises on the earnings front, and companies continue to adjust to current conditions even as the two big headwinds get better. Oil prices, for example, continue to rise, and the dollar continues to pull back. So overall, one more month of transition. We have a month where we're not quite out of the slowdown. Spring is not here yet, but we can hear the birds starting to go and we can see the buds. Hopefully, when we talk next month, I'll have more to say about how things are getting better. But in the meantime, thank you very much for watching, and I'll see you next month.